This is Grant Williams, Farm Bureau Insurance Agent, Columbia, South Carolina, and this is Get In Where You Fit In. Well, here we are again, getting in where we fit in. But today we're going to cover a topic that most people don't like to talk about: life insurance, a necessary commodity, something that I feel like everyone needs, but everyone doesn't feel as if it's important. Some people look at it as another bill. Some people just look at it as just pushing it off. I'll take care of that later down the line. But what most people don't realize is the younger you are, the healthier you are, which means the cheaper, more affordable the life insurance may be. Most people look at life insurance as the just in case. If somebody dies, there's money to bury me. Or if somebody dies, I can pay off my house. If you have children or a spouse or someone who's financially depending on you, life insurance is a necessary commodity they're looking forward to, or they need to continue their way of life as they know it. Most people don't look at it as in that aspect. We in the African American community, we typically look at it as just that. Someone dies, someone gets a check. Life insurance is much, much, much more. There's two forms of life insurance. There's whole life and there's term life. So you may ask, why do a whole segment on life insurance? I feel that passionate about it. Prior to me getting into this role, I was asking those same questions. I got it on a job, I'm okay, I don't need it. Or my mama got a policy for me when I was a child, that should be enough to bury me. But at this stage in life, I have a wife that's dependent on me. I have a child that's dependent on me. And when I say depending on me, they're depending on my salary, week in, month in, year in, for their way of life, their entire livelihood. Put yourself in my shoes. Imagine if you had someone depending on you, as most of us do. Be it a child, be it a sick parent, be it the uncle that we're taking care of. In some cases, you may be taking care of a niece or a nephew. There's several scenarios that could play out in this. But if you cease to exist in this exact moment, what would that person do? You're gonna let somebody else depend for them and push them to the side because they already have X amount of bills or X amount of responsibilities and they really don't want to take on this other responsibility? Life insurance is a sure way to ensure that your loved ones can continue their way of life without you not even being here. There's two forms of it. There's whole life and there's term. Term is essentially exactly what it states. Term. You have insurance for a term of time. Be it 5 years, 10 years, 20, or 30 years. Whole life, on the other hand, is essentially just that. From the moment you started, as long as you're making your payments, you'll have insurance for the length of your life. Now, what's the difference in the two? Like I said, term is just for a term of time. It's essentially, some people look at it as renting insurance. I don't like to use those terms because it's much more than just renting insurance. Term insurance has its place. If you have a mortgage, your mortgage is 15 or 30 years. If you just want to cover the children while they're under your roof, 20 years. The average person leaves home around 20, 21. Different scenarios like that. But at some point that term will end. There's no additional benefits from the life insurance other than the death benefit. The death benefit, if it's a $100,000 policy, that's the death benefit, the $100,000. Now, whole life, that's a horse of a different color. Whole life has a death benefit as well as a living benefit. That's the beautiful part about it. So what does that mean? Life insurance is essentially a savings account, a bank account. If you pay your premium monthly, at the end of each year, you'll get a statement letting you know the dividends that you've collected over that fiscal year. So how does that play into your day-to-day? We all have bills and unexpected things that may come up. Let's say you've been paying for a life insurance whole life policy for 10 years. You've gained quite a bit of dividends within that 10 years. You may have a few $1,000s just hanging out over there. That's your money. That's money that you've essentially earned from paying your premiums. So let's say you got $10,000 just sitting over there that you've accumulated in dividends. The those dividends transfer to a cash value. That cash value is yours. Like I said, you may have $10,000 in cash value sitting there, and let's say an emergency comes up. You can go borrow $2,000, $3,000, up to the 10 if you like. I say borrow, but you don't necessarily have to pay it back. It's your money. But if you take the entire cash value out, the policy will lapse and close on itself. So I always recommend, if necessary, if someone's dabbling into their cash value, don't take out the whole thing. Don't look at life insurance as a bill, because it's not. It's a savings account. At Farm Bureau, we have a saying: live, quit, or die. If you live, you have your cash value there and the policy. If you die, your family gets its full death benefit. If you decide to quit, you're not walking away empty-handed. You're gonna get whatever the cash value is at that time in a check, free and clear. You don't have to pay it back. There's no taxes paid on it. It's your money. So let me give you an example. This is when it really hit home for me. This is when I really realized there's a whole other side of this life insurance that I have no idea about. I have no clue what's going on. All right, so when I first got in the business, I was with one of our competitors. I wasn't with Farm Bureau at the time. It was around May. It was maybe a month before graduation, a couple of weeks before graduation, high school graduation that is. A gentleman and his daughter came in. The gentleman comes in with his daughter, and I greet him. Welcome to blah, blah, blah. How can I help you? And he looks at me and says, "1 second, sir." He looks over to his daughter and says, "Now, what do you want to do? Do you want to go to college? Do you want to open a business?" And in my mind, I'm sitting here thinking, like, why are they having this conversation here? This has nothing to do with insurance. But I sit there and let them have their moment. And she looks at her father and she says, "I can always go back to college. I want to open a business." He looks at me and says, "All right, son, I'd like to cash out her insurance policy." At the time, I'm oblivious to what cash out an insurance policy and any of that means. So I go to the agent, because I wasn't an agent at the time. I go to the agent, explain what they want to do. He tells me to go get the gentleman's name. I get the gentleman's name, bring him back. 30 minutes later, the gentleman leaves out. And I'm looking like, what did my agent say? "Sir, what just happened?" He said, "Well, he opened his daughter a $250,000 life insurance policy when she was 6 months old. She was now 18. So at the time, it was about $125. Doesn't sound like much, but the older you get, that policy is probably a couple of $100 for your average 25 or 30 or even higher for a 40 or 50-year-old. But the younger you are, like I said at the beginning, the cheaper and more affordable life insurance is. So I said, "So did he just get a $250,000? He was like, "Son, no, that's the death benefit. He just cashed out the cash value of the policy." And I said, "Well, how much was it?" He said it was close to $20,000. And I was like, "He just left out of here with a $20,000 check?" And he was like, "Close to it." And I said, "How did he do that?" He said, "Well," he then explained to me how dividends and cash value work. See, we in the black community, our parents relied on benefits on the job. As I was growing up, all I ever heard my mom always say, "Make sure you get a good job." I always heard grandma say, "Make sure it has benefits, good benefits, for health insurance, life insurance." But the job owns that. So if the job, like several companies are doing now, want to cut costs, if they decide to get rid of their life insurance or benefits packages, that leaves the employee stuck like Chuck. It's just that simple. So this gentleman took the initiative to open a whole life policy for his infant, which was super, super affordable at the time, for $250,000. Paid that premium every month, every year for 18 years. Had almost, I think it was close to like 18.5 or 18 something. He then took that check, went across the street to Synovus Bank, and used that money as collateral for a business loan, and got her a $250,000 business loan and put that 18 down. That was almost 4 or 5 years ago. I drive by her tanning salon. She opened a tanning salon, by the way. Drive by that tanning salon every now and then. It always reminds me insurance money started there without someone dying. So I said all that to say this. We in the African American community, Latino community, Caucasian Americans, it don't matter who you are. If you're an American, take advantage of the benefits, living and death, that life insurance offers. A small drop in the bucket today, being diligent, being disciplined toward your loved one's future, could be much more than you could ever imagine. Just think about that. He paid $125 for 12 months for 18 years. Do that math. Do that math. It's not even 18. It may be right around 18,000, but he used that as collateral to get. And so, just little things like that. I wasn't taught that as a child. My grandparents wasn't taught that as a child. My mother wasn't taught that as a child. But it's one of those things that if you don't know, you don't know. So my mission is to educate as many people as I possibly can. My mission is to help people see this vision, because usually people get around 45, they get that, or 40, they may get that first health scare and they like, hey, I need to go get some life insurance, because then it becomes real to them. But by that time, they may be uninsurable because they have that health scare, or they may be overweight, so the price that they could have been paying is no longer available to them because they're either overweight, unhealthy, have bad habits, things of that nature. That's why it's important for young people to get insurance as young as possible. I implore you, get insurance early. Don't rely on your job to have it. Make sure you get with someone who's willing to help you. That's what I do. It's not always about the sale. I would love to assist you in your life insurance matters, but it's more than knowledge. I feel like the more people I educate, I've done my job. It's not all about the sale. Like I said, my name is Grant Williams. I'm located, my office is at 1038 Wildwood Center Drive, right off of Clemson Road here in Columbia, South Carolina. My cell number is 843-453-5257. If you have any questions, if you just want me to review your policy, I'll be happy to educate you so you can go back to your agent and essentially use what I've taught you for your benefit. Or if there's any way I could assist you, I'd be happy to do so.